Lululemon stock is set to report earnings the 11th of December after the market closes. The stock is down 55% in the past year, so let's see if this is a good opportunity to buy the company by looking at the qualitative and quantitative aspects of the business. Let's start with the quantitative, which includes looking at the fundamentals and running a discounted cash flow model to calculate the intrinsic value of the company and potential future returns. Over the past decade, Lululemon's revenue has grown consistently, from around $2 billion to over $10 billion today. And looking ahead, analysts still expect growth, though at a slower pace. Revenue is projected to reach $14 billion by 2029. Profitability has followed a similar trend. Net income has risen from $266 million to about $1.7 billion currently. However, a negative aspect is that free cash flow dropped from $1.6 billion to $1.1 billion over the past year, so something to take into account. Analysts forecast that EPS or earnings per share will dip slightly in the next 2 years, before rebounding strongly. They expect Lululemon to earn around $13.31 per share in 2027, and then grow to $20.37 per share by 2029. If you assign a P/E ratio of 18 to those 2029 earnings, that would imply a share price of around $366, representing roughly 100% upside from current levels. Lululemon also has excellent margins for a retailer. Their gross margin sits close to 60%, while both their profit and free cash flow margin have been between 10 and 16%. Another positive sign for shareholders is that Lululemon has been buying back its own shares. This is always a good signal, as it means shareholders end up owning a larger portion of the company over time and get to share the profits with fewer people. And the cheaper the company has gotten, the more shares they bought, which is something I really like. Then, in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $150 per share, middle $238, and high $354. And because the stock is currently at around $182, this means that if my low assumptions occur, you would get a 6.5% annual return on your money, middle 20%, and high 23%. So huge returns according to my middle and high assumptions. Now as far as them, I assume Lululemon grows revenue between 5 and 9% annually over the next 7 years, the average of profit margin and free cash flow margin between 10 and 16%, which is around what they have been doing, and I assign the PM price to free cash flow at the end of the 7 years of 15, 17, and 19. And I also left the share outstanding change the same, to be more conservative. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, Lululemon is currently trading at a PE of just 12, the cheapest in a decade. Therefore, we can conclude that the company is trading cheap. Moreover, they have a great balance sheet, as they have $1.1 billion in cash and $1.7 billion in debt. For a retailer with a market cap of nearly $21 billion, that's a very comfortable financial position. Another impressive figure is the return on invested capital, which is around 26%. But now let's go through the risks, starting with tariffs, which has had a significant effect on profit. However, I believe this is going to be a short-term issue. A long-term concern that I have is the decline in US growth. In the last earnings, America's comparable sales decreased 4%, which is definitely something to watch out on Thursday. However, international comparable sales increased 15%. This is where I see a huge opportunity, and if they manage to grow back the US segment, they could go back to double-digit revenue growth. I personally started a position when the stock was around $170, and our dollar cost average if the stock falls below that level on earnings due to reasons that are not affecting their fundamentals. Lastly, if you want a discount on stockanalysis.com, grab my code in the description. I hope you found this video valuable. Let me know what you think about Lululemon stock in the comments, and I'll see you in the next one.